Hello, everybody. I'm hoping you're having a fantastic Friday. I certainly am. I have a weekend and one extra day off on Monday, so that's amazing. Yeah, I'm hoping you're doing fine wherever you are. Please follow me on Twitter and YouTube and all that good stuff as always. And remember, what I'm showing you here is not any financial advice. I'm just showing my opinions and what I see in the market. So take it as you may. Today will be somewhat uranium heavy. Um, because as I mentioned yesterday, we are very, very close to a major breakout for URA. Um, the market is not closed yet, so so we might be able to see something at the end of the video. But yeah, it looks good. So let's dig right into it. Um, I have 10 charts today, mostly ratios, but I think they're quite nice. Otherwise, I wouldn't have mentioned it. So, anyways, I hope you like it. Please follow until the end because I have an amazing ratio here that I have been thinking of for some time. It's quite simple, and yet I think it's very telling. So hold on. Hold on to your horses, man. Okay, big picture. Uranium spot price going back 15 years. You have seen this before. I'm just going to go through it very briefly. Left shoulder, head, and some sort of right shoulder here. And And if we were to measure the distance for where we could go, this is on log scale, remember? I'm trying to use log scale more than nominal scale. So where could we go? You have guessed correctly. Well, maybe you have. I don't know. $240 is the target once we break roughly 64. 240. You've heard it here. That's just absolutely amazing. The nominal target is, what is that? That's roughly here, the all-time highs. But on the log scale, you have to do the percentage. So amazing. $240 with a possible overshoot to the upside. So yeah, that's what I see. Let's go in shorter term. Shorter term, I don't know what that is. Anyways, we have this formation has been for the past, it's actually 1 year. Let's draw the lower boundary here, all the way across. We can do like that, and then we have a squeeze right there from this high here. We can also copy this bad boy right here, going up to here. So that's the top of that, and we are actually above the bear flag as well. So that's very good. And I'm thinking that we will actually go and have a target, have, a test of the major blue neckline here within, I don't know, a month, a month, two maybe, and that maybe even before. But that's what I see right now. So yeah, and I think this will be the break. We might, hit that neckline going back a bit, and then we'll break. But it looks very bullish right now. This this structure right here, also given the fact that the right shoulder is very small compared to the left shoulder. So it shows that the bulls have more control at the end of this major formation. I love it. Let's fucking go. Ah, excuse me. URA clean sheet, as you can see. I'm just going to focus on ever since we came from the COVID lows very quickly. You have seen this many times before. Quite simple, peak to peak. Look at that bad boy right here, all the way across. Look at this. I showed it yesterday. It's perfect. It really is. But remember, we need a breakout. We need a goddamn breakout before we can say we have resumption right to the upside. So we still need to clear 22, and then we have a big one, which is actually which is 24, roughly 24. Put it there. But we have you have these all the way across here. So 24. That's also a big one. So I think when we break, we'll shoot straight to 24 in a heartbeat, having some pullback, and then we will go further. So you can see where we are right now in a bullish trend. I'm using Heikin-Ashi candles. Please study those. They're quite good actually. But we are in a bullish uptrend right now. We have green candles all the way. We need to break 22. Will we do it today? Right now we are at 21.85. So 15 cents. So maybe we will be there at the end of the video. We have half an hour left. Similar, the URNM, which is a pure ETF for uranium miners, similar squeeze. As you can see, we still have some distance to the breakout, but if uranium will break out, then this will follow. So I don't think there's much more to show because it's quite similar to the URA, but we still need 6%, 5% until we reach this upper golden trend line here. So still looking very, very good. Obviously, getting below the lower trend line here would spell disaster. But yeah, I don't see that coming, to be honest. But you know, you're never 100% sure. URNJ, which is the juniors. It's a bit of a wild beast. It has only been here for like, what is it, 4 months or so, 3 months. IPO, then we had a bearish pennant, and then we came all the way down, and now we are in this weird structure, right? And it's you can't. It's tough to do any analysis on this, to be honest. But if I were to give anything, I think if we can break to the upside together with URA, of course, then we are going for higher highs. But we can also, if URA doesn't break out, we can also go lower here for one second attempt, maybe. But it's a bit weird one. Okay, into the ratios. URA against the Nasdaq. The Nasdaq. Yes, tech. Techity tech. I'm just going to do the daily here. Zooming out like this. It's on a log scale, so my lines are a bit different compared to nominal, but I hope you... there, it's fine. Okay. We broke down here in March 23, came into a blue range, dropped down to the lows here, and also this internal low. And then we bounced straight back up into the blue range, which is it's okay bullish actually, because normally if you get the retest to the lower boundary, then you pull right back. That's very bearish, but obviously we pierced spread through, as you can see. Green candles all the way, bullish trend. And I think we need to break the upper blue and also maybe this high here. But anyways, the upper blue, I think if we break that one, we are in some sort of mini bull against the Nasdaq. I'm also seeing the Nasdaq topping out a bit here. If you look at the Nasdaq chart, it's very steep. So I'm not calling the top, but maybe this run up top is somewhat close, and we need to have a pullback or a correction of some kind. So yeah, this it looks fine actually. We still have some way to go, but it could be better, it could be worse. This is URA divided by the SPY, the SP 500. Somewhat similar chart. We have the squeeze coming here. I think you've seen it before. Breakdown, rounding bottom, and then we just broke right back into the squeeze. That's very nice. So right now we are inside again, and a lot of people have gone short here, as they would and probably should, because we have broken such a big structure. But the green support held. We have the lows here, so the green support held all the way. And maybe if I'm not cheating that much, you can see there it is, the green support. So we had a dip below, then we are right back in. So against the SP 500 right now, it actually looks okay, I would say. Obviously, I want to see it dribble higher here. But for now, I'm fairly satisfied with what it has done in the past 1-2 months, maybe. I'm sorry, I can see my camera is very dark here. I'm having a cheap camera, so yeah, bear with me, guys. I hope the charts will do you better than my pretty face. Anyways, URA against overall commodities. What I'm again, it's on log scale now, so it's a bit different. But what I want to see is I want to break these highs here. To me, if we do that at around 0.086, then URA is back outperforming overall commodities. Obviously, as a bull in uranium, that's what we want to see. Yeah, nothing much more to add, I guess. You could argue that we have some sort of neck and inverted head and shoulders here, but given the fact we went so deep before, yeah, maybe it's valid still, but I will not add it in because it's so skewed. Oh, URA divided by uranium spot price, one of my favorite ratios, and you should look at it at least weekly. Promise me you do that, guys and girls. This green floor was punched through. then we snap right back up, straight back up, false breakdown in my view. And that will be confirmed when we get above this upper trend line right here, this one right here. And right now we have a big pole in my view, and we have a flag. That's what I see. So I would assume we could stay here for a while and then we'll pop to the upside, because this formation, as mentioned, very bullish until proven otherwise. And when we break this one, that's also where URA will break out against. Will break out, and URNM probably also will be very close. So this ratio here at 0.4, let's call it 0.4. That's maybe a bit too high, but 0.39 then. That would be where we are going higher. Also, let me show you this. We've seen it before, I know. Sorry, I know. But we have a big, just like the uranium spot price. Excuse me, we have a big inverted head and shoulders here, right here. And the target, if you can see the bottom here to the neckline, then we have the move here is actually all the way up here at around 1.86. So if we were to do a full move from where we are right now, in my view, we should see uranium miners do a 4x against the spot price. And I see the spot price going way higher than we are right now. If you remember, maybe even as high as 240. And we are at what is it now? I can't remember, 60 something. Yeah, let's call it 60. So that's a 4x. And then you do a 4x here. That's 16x in URA against, in relation to where we are right now. Absolutely amazing. It sounds it sounds a lot, but we will see. I mean, it's definitely a possibility given the ratios and where we think we are going. Amazing times, yeah. Again, URNM quite similar to divided against the spot price. Fake down here. Let me show that one, the daily. We have a false breakdown below, and now we are in the flag here. Same thing as the URA against spot price. Again, we need to get above. We need to get back above this formation here, in my view. Then we will be in a full-on bull mode where URNM is outperforming the spot price. That's exactly what we want to see. This was the run-up from the COVID lows to the highs right here. So we want to see URNM outperforming the spot price itself. Amazing, maybe, when we break out. We have URA against XLE. I showed it yesterday, I think. Or was it on Twitter? Can't remember. Anyways, we have broken out here. So URA is right now outperforming. Right here is set to outperform the XLE, the energy sector. Amazing. That's absolutely amazing. And also note, we have the red circle here. That was a breakdown from this formation, broke down. It was also a breakdown from the 30 weekly moving average. Same here, break up from this trend line here and the 30 weekly. I love the symmetry in this one because this was the start of the bear market, and this will be the start of the bull market in my view. Oh yes, this is uranium spot price against the nat gas, and I actually thought that, as you can see here, I posted around here. I can't remember exactly where it was, but somewhere here where I mentioned that I think this will be where nat gas starts to really pick up pace. But it has been very, very resilient, as you can see here, all the way across. And this right here is actually somewhat of a bullish setup. So if we were to break to the upside here, then for the first time in 15 years, we will make a new high in this ratio where uranium, the spot price will heavily outperform the nat gas. Or if we get the breakdown to the downside, that's where nat gas will outperform uranium spot price. That doesn't mean that the uranium spot price will go down, but it just means that nat gas will go up faster compared. That didn't make any sense. Anyways, I hope you what I mean. Okay. This is a ratio that I have been thinking about for some time. You can do the same for gold and silver miners as well. But basically, it's quite simple. You have the URA divided by this ratio here, which is oil divided by uranium spot price. And as mentioned, it's quite simple, but still, the idea is that this ratio right here, in the as you can see right there, if oil goes up, right, then this number in the parentheses gets bigger. Therefore, URA is getting pulled down. It's getting pulled down, meaning that it is much more expensive from an energy point of view for every pound that you get up from the ground. And if oil goes down, obviously this ratio will become smaller, or the number will get smaller, and URA is going up in that ratio. Similar, if spot price goes up, right, then the ratio gets smaller again, meaning URA is going up. So I hope you get my point. But the point is that if we're looking at oil compared to what it costs to get 1 pound of uranium up from the ground. So in my view, obviously this insane peak you have right here, this stuff right here, is oil going negative. So you shouldn't take that at all into account. But what I'm seeing is we have some sort of a level here at around 17, 18 ratio level. We have some sort of support and resistance zone, and I would say that when we break to the upside in this ratio, actually, let's say we break to the upside here, meaning either we have some options, right? Either oil is going down heavily compared to uranium spot price, or the spot price is going up faster than oil. So in my view, that's also one way to look at it and to see where we are right now. So the bull market hasn't even started in this ratio as well. And unfortunately, it doesn't go back further than this because the uranium spot price, I can only see back to 2010, I think. But I would say that overall, getting above, let's call it 20. Let's call it 20, actually. We have it up here, right? We have the nodes here, the highs, the whatever this is, highs, and we're trying again here. So getting above 20, you can book it. This ratio, when we get above 20, is also where we'll see a lot of acceleration in URA, the uranium miners, because they will start to earn more per pound compared to what the amount of energy that they're putting into getting that pound up from the ground, if that makes sense. I hope it did. But I will follow this ratio for a long time just to see where we are. As mentioned, you can do the same for, we have the GDX, for example, against oil and gold and silver. And I will put some charts with that, or maybe do it in a video, I don't know. But anyways, okay, that's all I had for today. Let's see quickly, where are we? Where are we? As you can see, let me go to the normal candles. Just look how close we are. This is where we are, guys, right here. But until we see a breakout, we are not obviously breaking out. But it looks good. It looks really good. Again, remember, these two candles here is taking out 2 or 3 months worth of candles in 2 days, meaning that the bulls are in full control. And there's no bears, in my view, there are no bears here, because if you can take out 30 candles or more in 2 days, that means that people have decided that we are going higher. And I think next week we will do the pop here, or like this maybe. But anyways, within 10 trading days, I think we'll break out. I could be wrong, as you know, but that's my view. That's my take on things. Okay, guys, I hope you have an awesome weekend. And I will be posting in 4 days' time. Not Monday, maybe it depends on we break out. But anyways, I hope you like it. And I will fix my camera. As you can see, it's very dark. It's very blurry. Anyways, guys, have an awesome weekend. And I love chatting with you on Twitter. So please follow me there. I will do whatever I can to reply to most of the comments that I get. Have an awesome day, guys. Cheers.